welcome. This is all you need to know. I'm Agam Akil. Let's start by taking a look at the global markets, and we have seen strength all through. This is following the Nasdaq and the Dow Jones advancing in trade, but very little move when it comes to the European markets, except for something like an FTSE, which did decline by around 0.8%. However, the Asian indices at this point in time are trending higher with 1.5% gains for the Nikkei, and the Hang Seng also advancing by 2%. That's had an impact on the SGX Nifty, which is also advancing in trade by around 0.5%, inching towards a mark of 11,000. Now, when it comes to trade for our own markets, last Friday, we did see range-bound movements for the benchmark indices, but the small cap and the mid cap indices clearly outperformed the benchmarks. That said, the banking indices did show some weakness, perhaps bucking the trend. But save for your Nifty PSU banking index, we did see gains in something like your pharma index, or for that matter, the IT index, which also advanced by around 1.2%. But moving on, let's also take a look at your ADRs at this point in time. A mixed picture across, but while Wipro, Infy, and Dr. Reddy's advanced in trade, we did see weakness in Tata Motors, well, perhaps largely on account of the weak domestic sales that we've seen, and some weakness also seen in Vedanta, ICICI Bank, and HDFC Bank. But moving on, let's also take a look at your foreign institutional flows. Now, after FIIs recorded with the highest flows in the month of November and the highest in the 10 months, we're starting to see some more weakness come through with sell figure of around 333 crores on a net basis. On the other hand, DIs plowed back in nearly 1,500 crores on a net basis last Friday. But coming down to your contributors, it's essentially the banks which have, grabbed the limelight, considering HDFC, Kotak Mahindra Bank, and Yes Bank advancing. On the other hand, we saw weakness in ICICI Bank and IndusInd Bank bearing down on the indices, along with something like an ITC and HUL as well. But let's also take a look at your futures and options space. Very little to speak for when it comes to your futures, the Nifty futures, considering very little unwinding. The Nifty banking futures, however, stood out, considering a decline in nearly 10% in open interest. So longs were unwound even as the underlying declined by around 0.3%. But let's take a look at your open interest distribution, and it is, well, early days in this series, so we're still looking at determination of those range. But for now, we're looking at 10,500 on the lower end and 11,000 on the upper end. When we did see a lot of changes in open interest around the 10,700, 800, and 900 mark. But coming down to your India volatility index, that rose around 2.5%, despite the fact that the indices were flat. It's at around 19, but should we see strength come through, we're likely to see this come off as well. The Nifty put-call ratio, well, not just changed there, 1.7. It's the same for the Nifty banking put-call ratio, despite the fact that we saw a drop in the index at around 1.17. And coming to taking a look at your stocks, we have Oil India, a drop of around 8% out there. A lot of longs building in, 91% increase in open interest. Repco Home Finance, on the other hand, seeing a lot of longs, considering its underlying advance by around 8.5%. And Siemens saw a considerable amount of short covering after we saw a 22% drop in its open interest, with this underlying advancing by around 3.2%. So a whole host of stocks to watch out for, but more importantly, to see whether or not the Nifty can move above the mark of 11,000. But with that, let's now go across to Rami Inocencio of Bloomberg for the top international headlines.
Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Now, Labour says it is, quote, inevitable that the party will propose a no-confidence motion should May lose the debate on December 11th, and that would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. Meantime, the EU is turning up the heat on Italy, demanding the populist government lower its budget deficit target from the stated 2.4% to below 2%. La Repubblica says Brussels wants spending cuts of at least $5 billion to avert potential sanctions for breaching EU budget rules. The Italian parliament will debate the proposed budget this Wednesday. Russia and Saudi Arabia have yet to officially confirm new oil curbs after agreeing to extend their deal to manage the market into next year. President Putin announced the OPEC Plus extension after meeting Saudi Crown Prince Mohammed bin Salman at the G20. The OPEC president said he is optimistic the alliance will reach an agreement on production cuts when they meet later this week in Vienna. And Macau bounced back in November after months of weakness tied to the slowdown in China. Gross gaming revenue rose 8.5% to $3 billion from a year earlier. That's more than twice the forecast. The result is a 28th consecutive month of expansion in Macau, but November was a third month in a row of single-digit growth, with September and October the weakest in more than 2 years. Global News 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ramy Asensio. This is Bloomberg.
President Trump and President Xi found common ground at that dinner on Saturday night here in Buenos Aires. We can talk about a couple of the details. They are very important. The ceasefire, as it were, lasts for 90 days, so that takes us more or less until the end of February. The United States has agreed not to raise tariffs on some $200 billion of Chinese goods. They were set to go up to 25% on January the 1st. Instead, they're going to remain at 10%. And in exchange, and this is the big deal, the Chinese have agreed to do a number of things. First of all, they have agreed to start buying more American agricultural and industrial goods. They have agreed to take action on fentanyl. This is that high-powered opiate which has been the source of so many crises and heartbreaking situations in the United States and, of course, elsewhere. But most importantly, China has now has 90 days to demonstrate that it's willing to how would I put it, to show some progress on the Trump administration's biggest beefs. What are those? It's not just the trade imbalance. It's the systematic theft of intellectual property. It's the coerced transfer of industrial technology. It's subsidies on state-owned enterprises, and it's cyber espionage. 90 days. It sounds like a long time, but it's a lot for the Chinese to demonstrate in short order.
The actions over the weekend is definitely a positive outcome and brings modest upside risk to our global growth outlook. So essentially, the way we operated in our analysis in building in growth sentiment because of the trade tariff is that we always tend to say that, okay, whatever is announced, we will build into our numbers. So since this tariff was already announced that from Jan 1, it will go from 10 to 25, we had built a 10 bips downside to our growth on account of that. But if that doesn't happen, then it brings that 10 bips upside to our global growth outlook.
So modest upside risk, that's what you're anticipating here. What do you make of China's response thus far? Do you see their stimulus continuing? That seems to be the case.
In the sense that what do you think China will do going forward on the promises that they have to fulfill? So I think there's a lot to be done as yet. So we would say that the road ahead is still quite bumpy. We think China will try to come up with a whole lot of adjustments that they would have to make, particularly promise on protection of intellectual property issues, but more importantly also liberalize further its economy so to ensure that the agreement moves forward.
The term rebalancing is floating in between the Russian President Vladimir Putin as well as MBS, Mohammed bin Salman of Saudi Arabia. And they did make that memorable handshake over at G20, talking about possibly doing something here. But in terms of OPEC delegates, they already gave their blessing. Now it just has to be seen what is actually really going to happen. But Russian President Vladimir Putin came out with a statement saying, listen, we are going to do this, but there have to be some details that we have to figure out. For example, he said there's no final decision on volumes there, but together with Saudi Arabia, hand in hand, we will do it. And from whatever number, there's going to be it's going to be based on a joint decision. We agreed we will monitor the market situation and react to it quickly. So, like how we've said that the Fed is data dependent, Russia as well as Saudi Arabia are going to be data dependent as well. Hopping into the Bloomberg terminal, though, there is a lot at stake in terms of the oil price. They don't want this to go much further lower. more, but take a look in the GTV library, because in November, it had the worst monthly fall ever since 2008. Of course, we know what happened back then, the great financial crisis, when oil fell even worse. So they're going to try to be pushing this higher. Ever since September, it fell by about 30%. That's from a 4-year high. Let me go ahead and flip up the chart here just once into the GTV terminal library again. And we can see that Saudi Arabia, Russia, as well as the United States, they are the biggest oil producers in the world right now. We can see that U.S. and Russia here in the yellow and the blue are having the biggest monthly outputs. The next question, though, is how much will be cut, starting when, and of course, for how long?
Auto stocks will be in focus today as they report their November auto sales numbers. We'll start with India's largest car maker, Maruti, which reported a third consecutive month of drop in auto sales, falling by about 0.7% for the month of November, coming in at about 153,500 units. What helped them is the strong growth in the exports. What didn't work for them is the 19% drop in exports, along with a 22% fall in the mini car sales segment. M&M Auto reported a good set of numbers, with the total sales growing by about 17% for the month of November. What helped them is the 26% growth in the commercial vehicle segment. Along with that, Escorts too reported a good set of numbers, with the total sales growing by 56.4%, coming in at about 8,005 units for the month of November. Also, Tata Motors will be in focus after they reported a disappointing set of numbers. The overall sales for the month of November, they fell by about 4%, coming in at about 50,470 units, well below the Bloomberg Quint poll of 56,000 units, which was estimated for the month. What didn't work well is the 5% drop in the commercial vehicle segment, as well as a drop in the passenger vehicle segment. So overall, it was a bad month when it comes to Tata Motors. And Hero MotoCorp, that reported its numbers as well, coming in at about 6,10,000 units, which is a marginal improvement of 1% over the same period last year. Also, aviation stocks would be in focus today as well, after ATF prices for the month of December have been cut by approximately 11%, tracking lower crude oil prices and stronger rupee. Sandhar Technologies will be in focus as well, after the company said that it has entered into a joint venture with South Korea's Kwangsung Corporation for the manufacturing of plastic products and accessories for passenger vehicles and commercial vehicles in the country. And Monte Carlo Fashion, watch out for that one as well, after the board of directors of the company have approved to buy back close to 4.6% stake in the company at a price of 550 rupees, which is at a big premium of 42% to its current market price of about 387 rupees.
I think from the expenditure side, it is only private consumption slowdown, which is the bulk of GDP, that's responsible for the slowdown in the growth to 7.1%. The private, the government consumption expenditure, private overall investments, and exports, I think they've all accelerated. The growth rates are higher than they were in the first quarter. So that's the expenditure side of the story. I think from the supply side, if we see, the drag is coming from services. I think the non-service part of the economy is doing reasonably well. The services, which used to be the driver, they have slowed down, and I think this slowdown has been, this is the third quarter they're showing below trend and very weak growth rate. The finance, real estate, trade, I think these segments are not growing above, perceptibly above 6.5%. So they're all below 6.5%. I think this is what used to fire growth earlier. And some of the reasons are explainable. I think the financial sector, the slowdown, particularly the banking sector, is also getting reflected in GDP. Telecom sector gets into the other part, the communication part. So I think unless these start reviving, the decisive upward trend in GDP is some time away.
Mr. Ghosh, is that your broad analysis as well? And then I'll get into specifics.
See, I have broadly 3 points to make. The first is that the private final consumption expenditure had indeed slowed down significantly in second quarter. The constant prices, the year-on-year growth rate is around 7%, which is down from 8.6% in the last quarter. So that's point number one. The point number two is that if you actually look into core GVA, basically which excludes the agricultural sector and the public sector, the public administration, that has significantly slowed down to 6.6% from 8.6% last quarter. So that means there has been an overall demand slowdown. And the third thing is that the apparent distinction, the apparent contradictory growth rate of the agricultural sector and the non-agricultural sector now looks clearly visible. If I break down the GVA into non-agri GVA and agri GVA, the non-agri GVA has expanded at 13.4%, nominal non-agri GVA, and the agri GVA has actually now collapsed to 2.8%. And in fact, the agricultural GDP deflator, if I calculate it, that is now at negative. September is actually at -1%, which is for the first time till June 2017, the agricultural sector, the price deflator has turned negative. So this indicates that there is a significant element of rural distress which is happening, which is perhaps adding on to the overall sentiments. And apart from the factors which Joshi mentioned in terms of the service sector, I think this is also one of the factors which is dragging down the overall growth rate.
All right, those are great insights, Mr. Ghosh. Dr. Sen, I'm coming to you last so that we can get a slightly broader picture from you as always. What are you seeing in the growth rates that you've seen in the past few quarters and in this quarter? 8.2, while not an outlier, but clearly seemed like it was boosted at least by, a base, etc. Wasn't reflective of any dramatic strength in the economy which was lasting.
Well, there are a couple of things. The first is the base effect, of course, does certainly play a role. The base effect in the first quarter was strong and it's starting to wane, and it will continue to wane as we go forward. But that apart, I think there's a more fundamental economic story that needs to be told, which is that, consumption behavior is usually fairly predictable in the sense that even if there is a downward pressure on the growth in incomes of people, they do try and maintain the consumption behavior over time. But after a while, the pressure becomes too much and consumption tends to go down. If we are seeing the beginning of this downturn, then it can in fact be persistent. So that's something we're going to have to watch out. At the moment, it's only 1 quarter of data, but that's a very real danger.
On the big brokerage calls for the day, first we have is Nomura on the Indian tyre industry. Now, according to the brokerage, the industry fundamentals are in a better shape now with healthy demand and high utilization levels. Now, the brokerage believes that the Indian tyre industry is a play on healthy growth outlook, pricing discipline, benign commodity prices, which will go and support the margins going forward. Now, most companies have already hiked the prices by up to 6%, thereby passing on most of the commodity cost pressure, which is a key positive for the sector. Now, despite large capacity expansions that have been planned by these tyre companies, the brokerage is expecting the utilization levels to remain high on the back of the strong demand that has been seen in the Indian tyre industry. Now, the brokerage has initiated coverage for 3 tyre companies. Now, for Apollo Tyres, it's a buy rating with a target price of 288. For Seat, it's a neutral rating with a target price of 1346, and for Balkrishna Industries, it's a neutral rating with a target price of 1008. And the second brokerage that we have is IDFC Securities on Shankara Building. Now, the brokerage has downgraded the stock to underperform from neutral and has cut the target price to 525 from 1065. Now, this big cut has come in for Shankara Building post the conference call that the company had held on Friday, where the company said that its margin could further slip going forward because of competition and because of its aim to create a healthy balance sheet. Now, according to the brokerage, this competitive intensity for Shankara Building is very high in the industry, and the company also needs to improve its value proposition further going forward. Now, for Shankara Building, the revenue growth is expected to be, the benefit of this revenue growth is expected to be lower compared to the cost involved in terms of margin trade-off, which is a negative for the stock. Now, the brokerage has cut the target price and downgraded the rating, given weak potential benefit of the change in strategy and visibility in terms of execution.
My name is Hazik Kazi. I'm 12 years old and I'm from Pune.
Hi, my name is Gitanjali Rao. I'm 13 years old and I'm from Denver, Colorado.
The ocean pollution is a huge problem. It's a really huge problem. If no one does anything about it, my generation and the coming generations are going to suffer. Around 2-3 years ago, I had watched some documentaries about the ocean waste problem. This really broke my heart to see so many animals dying.
So water contamination is a huge problem all over the world, especially in a country like India. There's different types of contamination that could happen, but what I've been focusing on for the past year is lead contamination in water. And lead can get through water through many different sources, some of which you can see at your own home, like brass faucets is one that can really introduce lead into water.
So Eris is basically a large ship. It has various compartments in it and saucers surrounding it. So the saucers use centripetal force to suck in the waste, and the waste is stored into different chambers, according to large, medium, small and micro waste. There's also a compartment for oil. So the challenges I had in the beginning was first, making a ship was not child's play, right? I also think I had a lack of data, because like this last week I found out that 80% of fishes in the Amazon had some sort of plastic in them.
It's like a box with the cartridge, and you dip the cartridge into the water you want to test. And then you open up your phone, you open the app that I created and connect to the device through Bluetooth, and then it gives you the results of what your lead status is.
One of the main challenges I faced when I was originally creating the devices, I finished research. At the end point when I finished research, I was so excited. I was like, let's get done with this. And I got everything ready. I had everything I needed. And then I asked my mom if I could do all the tests in her backyard with like carbon and chloride and lead. And she's like, no, you can't do any of these tests in her backyard. Eventually, the place that I didn't look at all, my school, was ready to give me a lab to do my tests in. So that was super, super kind and generous of them.
So right now, I've been working on improving the accuracy of my device in a lab space in Denver, Colorado. I'm actually working now more on the commercial feasibility of this product and if it can actually be out in the market. When if our kids put our heads together, we don't limit ourselves to ideas. We have the ability to expand our ideas and grow our ideas, and we have all these far-fetched ideas which can actually become a reality. When some adults limit themselves to ideas which can only be done, which at a younger age, I thought anything was possible.
Well, a lot of stories like that one you'll find on the website bloombergquint.com. You'll also find all the live market action, and that should be looked into today, so you should log on over the course of the day. Log on as of now to find a couple of stories that you should consider reading. India will buy locally manufactured BrahMos supersonic missiles as a part of its 3,000 crore rupee defense spending plan. BrahMos will be procured for 2 Navy ships that will be built in Russia, while a local firm, BEML, will produce the ARVs, according to the ministry. Struggling to keep itself afloat in the wake of a dismal financial performance in the last 3 quarters, Jet Airways is withdrawing its flight services on as many as 7 Gulf routes from this month. The airline will stop operating around 39 services per week to Doha, Muscat, Abu Dhabi and Dubai from various Indian cities. That's all you need to know going into trade today. It's going to be a busy one, but in all probability, it's going to be a positive one based on cues that we've received. So do tune in. Up next is Indian Open. This is Bloomberg Quint.